Hello and welcome to episode 4 of the Moon Boy podcast. In today's episode, we are going to be talking about the psychology of the markets, the halving event in miner rewards, and whether the government could be behind Bitcoin from a conspiratorial perspective, and how does a currency with such high volatility function. So we're going to be going over that argument and why we think it will still work. My name is Dallin Anderson at High Altitude Investing, and this is my best friend Donovan over at DIY Investing.
Hello, everybody.
And it's going to be a really awesome day, so make sure that you smash up that like button. By the way, happy Friday, everybody. I know the weekend is coming up, so I hope you guys enjoy your weekends. And go ahead and hit that subscribe button on both of our channels. Links will be in the description box below. And make sure that you comment where you are tuning in from in this beautiful world. So let's just get straight into the psychology of the markets. Donovan, I know that you analyze market cycles, and one of your favorite things is to look at the psychology of the market. How would you personally talk, and what would you say about the psychology of the market right now from a perspective of where are we at in the psychological emotions that everybody feels in the market? Because we all feel these emotions through these market cycles. Right. So I wanted your opinion about maybe where we are at in that cycle.
Right. I think that for me specifically, and I know that you trade cycles as well, it's always something we think about as far as where are the emotional sentiment regarding how everybody else feels inside of the market in general, whether it's trading, whether it's investing. It's all kind of one big group of people inside of this market. And so we oftentimes try and figure out exactly where we are as far as price and where we're about to be. And we use this market sentiment and the human emotions that are involved with trading and investing to dictate this. And I think that I've recently tried to do this through different polls with Twitter and different things, just try engaging on like YouTube comments. And it's really hard to do something like that because the amount of people that are in crypto that view our stuff is already such a small majority. And so it's harder to gauge sentiment based off of different sort of analytics that you can run on Twitter. But based off of what I can see, based off of what I know about price and kind of how the cycles have lined up thus far, it appears to me that we have just entered this disbelief phase where, I mean, from December in 2019, we had this major breakout period where Bitcoin went from $3,200 to $14K. And that kind of was the point of capitulation, and then from that point we rallied super hard. And it left people really surprised, and from this initial sell-off from that point, I know that I've seen a lot of different charts and analysts in general that talk about Bitcoin going to new lows and seeing Bitcoin being more of a bearish setup right now. And to be quite honest, that is why I believe that we're in this disbelief phase where there's so much, like probably half of the market or an even bigger majority than half of the market thinks right now that Bitcoin is most likely not going to go up again. Everybody's bearish on alts, I think. Like the majority of people are bearish on alts. And so because of these reasons, people don't expect it to go up, but this is why the new cycle is just starting. It's that first leg up in the new trend.
Yeah, I completely agree with you. It almost even feels like a disbelief phase. Like, I mean, I don't know about you, but 3.2K Bitcoin, I couldn't control myself. When you're as invested as you are in that market, you feel the emotions that the market cycle is creating. And at the very bottom of the market, I was kind of down on myself. I'm not going to lie. It was like, wow. But that's kind of how I gauged myself. That's how I knew that, okay, 3.2 Bitcoin, 2K Bitcoin is probably like the lowest we're going to see it in a long time. So that's where I posted that it would, break out of a WXYXZ correction.
Right.
And it did. And I think that it feels kind of like disbelief right now. If you like look at the chart, you're like, I don't know, maybe not, maybe it won't go up. There's kind of this distrust in the market, this disbelief. And I like how you said that, you can be a crypto Twitter influencer and you can ask all your followers what they think about the market, and you can try to gauge sentiment. But from when we talk about market sentiment, we're talking about what the world views about it. Exactly. We're not talking about what a whole bunch of people that follow you on crypto Twitter that are already either bullish or bearish think about where the market's going to go. This is when you're talking about gauging sentiment, that's something you want to do on a global scale. And the only way to gauge sentiment on a global scale is with the chart.
Exactly.
Which is why we teach technical analysis.
I agree.
And the market cycle cheat sheet, also known as the Wall Street cheat sheet, is legendary, like you just said, and extremely valuable in times like this, where you're trying to decide what to do, what's smartest to do with your money, you know?
Sorry, I don't mean to cut you off. One of the things I've always told my subscribers is the fact that the Wall Street cheat sheet is one of the biggest core principles of investing that I feel like everybody should kind of know about, because you don't really have to know technical analysis super efficiently. You don't have to know how to use Fibonacci or fancy indicators or anything like that. You can literally trade and invest inside of any market through understanding how the emotional psychology lines up with everything. And so the Wall Street cheat sheet just is, we can maybe pull it up here in the video, but if we don't, it's just a graph that shows a market cycle. It shows a big parabolic run, it shows a crash, and then it kind of shows prices just kind of flatline for a while, and then it starts the cycle back over again into new highs. And that's just the way crypto behaves. It's the way any market behaves, especially one that has a lot of human emotions like crypto, very volatile, a lot of dumb money plays with it and kind of gambles. And so when we trade this Wall Street cheat sheet, it's just a way that these new guys can get involved with it, where they can actually see the patterns reflected on a price chart. It doesn't have to require a ton of TA skill, but they can actually invest their own money into this, and that's kind of why I've branded my image as DIY investing, is to help as many people that aren't going to trust others with their money and want to do this with their own hands, a kind of hands-on approach. They can get a hold of cryptocurrency investments. They can actually take charge of their own investments. And through simple knowledge that we have on the internet nowadays, it's actually able, and we have this knowledge at our fingertips that we can actually use for obtaining this financial freedom that we're all looking for, investing inside of this market.
Yeah, you're going to make way more money investing yourself. It's going to be a little bit harder at the start, for sure. But it's going to be well worth it from a financial perspective. Also, you guys, we'll just drop a link to the market cycle chart in the description. We've talked about it a million times, but we'll just drop a link to the image so that you guys can check that one out as well. But if you guys are learning technical analysis and you don't know where to start, start with market cycles. Start with the Wall Street cheat sheet. If you can learn to identify a disbelief phase, if you can learn how to identify a new paradigm phase, and if you can learn how to identify a depression phase in the market cycle, those are really the three things. You can pretty much determine where you're at in almost every single cycle, and see whether it's risky or whether it's reward to put your money into.
Exactly. And I might pull up a chart here as well from a recent video I just made regarding the cycles around the total market cap of cryptocurrency. And basically one of the things I talked about was how every new year is a major reversal point. And just kind of going off with the psychology of the market, we can see that every January is a major turning point based off of the emotional psychology. So whatever reason, the market goes in these 3-year phases, and so you'll have the peak. It's either the bullish reversal at the bottom of a cycle, or it's the bearish reversal at the top of a bull cycle. And from that point, it'll usually happen right at the new year, and the market will reverse. And so what we just saw with the altcoins was a reversal back at the first of the new year, 2018. That's when we saw the start of the bear market. And then we went into this 1 year of bearish trending markets. And a year from that point put us exactly at January 1st of 2019. And it was at capitulation, which was where the market sells all of their positions. They exit. It's the lowest point of the market that it goes. And then from that point, a year later, January 1st of 2020, that put us at the recent bull reversal that we've seen, where prices went from $3,200 upwards of $14K, and we sold off down to about $6,500, and now we're actually going back up. And that was another year from that point. And so we know that the cycles not only go up based off of the emotional psychology, the emotions that are felt in how price goes up, but it's also felt on a time scale where we can see that different catalysts around the new year happen based off of the psychology of the market cycle. And that's just something I've noticed recently that I thought was really interesting. Just another sort of detail that you can add towards how deep this cycle analysis goes on an emotional level, on a time frame level. there's so many different ways. I mean, there's even other people that are out there trading based off of astrology that you can look into. It's just crazy theories out there.
Yeah, Gann, Gann, was a trader that traded purely based on astrology and math as well, of course, specifically like Fibonacci math. And he would use Fibonacci math with astrology and time the markets. He would know exactly what day to sell and exactly what day to buy. And kind of the idea behind this is the fact that humans are on cycles.
Right.
And you know, we're connected to the circadian rhythms of the earth. So there's all kinds of different rhythms that our earth has. There's seasonal rhythms. There's rhythms that are associated with the stars.
Right.
And all of these different rhythms, humans actually function on these rhythms. And whether we're conscious of it or not, on a subconscious level, we're doing things based on these cycles. And so that's kind of where like the astrological prediction stuff comes in. But it really amazes me, every single time it amazes me how perfect, like you said, the cyclical nature, the timing of these market cycles go. You know, people come to me all the time, Dallin, how do we time these markets? I've made money in them, but it seems to me like it's really hard for me to time the market, always getting in at tops and always getting out at bottoms. And it really just boils down to the fact that you need to map out these cycles, the psychology of the emotions, and you'll probably find the cycle and you'll see that it repeats in a very, very specific way. It's not exactly the same from a visual perspective every time, but it's so close that what people like to say is it rhymes with it. So it has the same flavor as the last cycle, enough so that you can determine what to do in certain places and situations way better than you would be able to if you didn't know the timing and you didn't know the emotions.
Yes, I agree. And cycles, one of the biggest things for me is I feel like cycles are important because it doesn't, I mean, one of the ways that I like to look at it is over the last 2 years, my TA, the amount of technical analysis that I do on each chart, it's actually gone down significantly. I don't hardly even draw on charts. I have like a certain criteria that I look for, and then I kind of base my strategy around that. And it doesn't require me a lot of maintenance around my technical analysis because I have a plan in place, and it just requires like small maintenance along the trend. And so with the emotional psychology and understanding cycles, looking at the big picture, it's so much easier for anybody, whether you're just some average person looking to invest in the market, whether you do have a lot of money to invest, or whatever it might be. Knowing how these big picture cycles work is going to put you at such a strong advantage over the rest of the people trying to invest. Because one thing that I learned from my own learning experience with the last bubble was I jumped in and immediately tried to start learning trading. And that's a good thing. I mean, I'm thankful that I learned how to do that and obtain that strategy. But for the average retail investor, I got in really early, and so I had an opportunity to actually maximize full potential on the last bubble, getting in 2016, and then being here ever since. But these average people that are in, who knows how many bubbles there are going to be, and if this is potentially one of the last big ones that we do see, I think that the best thing that you can tell people is don't try and trade as much. Don't try and become this top investor thinking that you're going to be able to go out there and take these big positions and just, you know, profit off cryptocurrency, when in actuality, there's so much that goes into learning how to maximize your reward while also minimizing your risk. And most people don't know how to do that. And so by understanding the big picture cycles, it doesn't require you a whole lot of maintenance with trading. It doesn't require you small picture thinking with trying to catch every swing in between. But you're maximizing the biggest majority of that trend and making the biggest amount possible for yourself with minimizing your risk to the fullest degree I think is possible.
Yeah, I think we've talked about this before, but just investing as a beginner versus becoming a day trader.
Right.
You know, that's a really, really big thing. Like, if you invest in something, yeah, there's going to be ups and downs along the way. But if you buy something and hold it over the period of a couple of years, the amount of thought that goes into that and the amount of places that you can go wrong is minimized. Whereas if you're taking 500 trades in that year, there's 500 times that you can screw up, you know. But if you take one investment and you're investing for the long term based on the trend, the odds of you screwing up in that investment are so much more slim. If you buy right now and then you sell the bottom of the next cycle, you're still going to be in profit. I mean, if you bought Bitcoin at when I was getting into it, around, $200, a little bit below 200 actually, and then you would have sold the exact bottom of the next cycle, you just completely got scared and you couldn't handle it, you couldn't do it, so you sold at 3.2 thousand. You still bought a $200 Bitcoin and sold it for $3.2 thousand at the bottom of the next cycle. So if you're investing when everybody's fearful at the bottom of these cycles, you can sell the next bottom out of fear and still be at such a big profit, it doesn't even matter. Don't. Like wait for the next cycle. Like once you've learned the cycles, don't sell the next bottom, but you can. And I think that's really important to remember is from an investing standpoint, if you're buying fear, the probability of you making a mistake is so freaking low that it almost doesn't make sense not to invest at that point.
No, I agree. I agree 100%. Overall, everything's looking really good as far as just looking at how these markets are progressing, and to see us just kind of being able to capture that and be able to help these other people getting on that are learning some market cycle analysis of their own, that are learning their own simple strategies. I know that the fact that we're actually making this podcast, and there's a decent amount of people that actually watch this at this point, and so the fact that we're actually able to get this out and help these people that don't know what they're doing, getting in here, investing, trying to do this at their own exposure, because at the end of the day, like, I've always wanted to be able to help as many people and to have like how the cycles just progressed longer and longer. It's kind of done what we've always thought it was going to, even though I think it's definitely had many surprises along the way. It always continues
Big
to
picture,
surprise.
it does exactly what we expect.
Of
but
course.
the smaller swings sometimes will get caught on a smaller swing and in the smaller time frames, but
it's just part of the game, really. And we have the Bitcoin halving coming up as well, so that's something that we want to talk about, and I'm really excited about that. Less than 100 days away until we have the next halving. I know a lot of people that watch us probably haven't experienced it. 94 days.
94 days and 8 hours and 35 minutes.
94 days until literal moons and Lambos. And so basically the way I've been structuring my personal investments from a time frame perspective, and what I've been telling people close to me to do, has always been accumulate pre-halvening, and then after the halvening is where you just want to kind of long hold for that next year, and then after that year is where you kind of want to be scaling out and taking those profits, and that's the way I'm personally going to be trading the market. And I think that with this next halvening, we have, like you said, 94 days to really set in stone what we're accumulating. Everything hit their lowest point like a month ago at the new year, and then from that point we've pretty much been going up. And so I think that people are still in disbelief that markets are going to keep trending lower. I think that we're going to start to see those next major impulses with us being so close to that happening less than 3 months away. I think that that's going to really bring in a lot of new wealth as we start making our first little impulses along this new trend. And then once the halvening actually takes place, I think that that's when we'll start to see a lot of new FOMO retail money kind of coming in.
So the reason that the halvening is so important, first of all, the halvening happens, every single time the halvening happens is right after a big depression. So basically the market cycle expands extremely parabolic. You get euphoria, new paradigm, which if we're talking about market cycle and psychology of markets, euphoria and new paradigm, we've both felt that. That feels amazing. It can create delusions if you're not careful pretty easily. You have to really keep,
the emotions in check.
Keep your emotions in check as best as you can. And we felt that before, but usually that happens after a halving event. And then we see a depression and a bear market come in, and then after that bear market, when we're in the disbelief phase, actually a little bit after the disbelief phase, we always have a halving event.
Exactly.
And the kind of the idea behind what drives the price up in the markets behind the halving is the fact that the miners get rewarded half as much, which means the price of Bitcoin needs to double for miners to stay profitable. And So if Bitcoin is going to continue to succeed, when the price halves, it needs to double so that we keep miners, we keep distribution, and we continue to have the network get processed and that data be processed. And so the halving event could double the price pretty easily. If not, it might start by doubling it and then go even beyond that. That's
Doubling
what happens.
The price from what? From what?
Whatever the price is the day of the halving. So like if we look at the price of Bitcoin in the last halving,
It's like $600 or something.
Yeah, the last halving, it was around, I remember, because
So it would have had to go to at least $1,200 is what you're saying.
Yeah, otherwise miners can't stay profitable, and if miners aren't profitable, the entire system fails.
Right, okay.
Miners are literally like the core of the network, and so we have to have miners stay happy, we have to have them continue to profit. So around the time of the last halving, prices rallied up to 750, and then actually the days of the halving, I believe it dipped a little bit.
Yeah, it did.
Which isn't surprising at all,
Kind of,
but then
Litecoin did the same.
Yeah, it dips kind of the day of the halving, but after it recovers from that dip, the halving really gets priced in. And what's interesting is we went up to about $700, and then we went all the way up to $1,200 after the halving.
Right.
So we did get that doubling in price, and that doubling in price then fueled the entire next bull market. Mm-hmm. Once the price doubled, everybody was like, okay, the miners are getting paid, we went through a bear market,
right.
The market is ready to go into.
There was a lot of uncertainty with the last bull run, and we've kind of talked about that here on the podcast. We've talked about how when we got into Bitcoin, it was right after Mt. Gox, the bear market after that. Everybody thought that the bubble was over. Everybody was kind of scared out at that point. Mm-hmm. And then not only that, but when we did start the uptrend back up, after the halving took place, we hit that all-time high mark, we doubled in price. And then we started seeing all of that China FUD come out. China was banning Bitcoin. Yeah. And then we started seeing a little bit more selling taking place at that all-time high mark. But it was really interesting to see that there was so much different negative bias towards Bitcoin at that time. There was so much pushing it to fail, and to see how much it succeeded.
Right as it was breaking out.
Exactly, and so I'm expecting us to have something similar. Maybe we'll experience another big hack. Maybe we'll experience something big, some big leak. Maybe who knows? Nobody really has any idea.
It'll probably be China FUD again. We'll probably start going up. Who knows what it's going to be? It doesn't matter. But there's going to be some type of narrative that scares the majority of people out from investing under the all-time high. Mm-hmm. Once it breaks that all-time high, there's going to be little FUDs along the dips and along the way up. There's going to be people, like last bull run when Bitcoin hit 5,000, Jamie Dimon said, oh, this is a bubble. And then, well, actually, he said it was a bubble at like 3,000, if I remember correctly.
I think he said
it went to 5 and then it dropped to 3, and I'm pretty sure right in the dip is when he said that it was a bubble. But it doesn't matter. Either way, there's going to be people talking crap. There's going to be tons of people trying to get you not to buy it below the previous high. And until it actually breaks that all-time high, we're not going to see very much confidence in the market and the news and any of that stuff.
And it's interesting, too, because this cycle has so much more positive sentiment going towards Bitcoin. People actually know about it. Mm-hmm. They've at least heard about it. We're starting to actually see it getting some real institutional adoption. And so this next cycle is going to be something that's really big. We're going to see that retail involvement starting to take place around the breakout of that all-time high mark. I think it's actually going to be this next leg up. I mean, the way I'm looking at it is we've already started our next impulse towards that all-time high mark. We might get a couple short-term dips along the way, but realistically to me it doesn't seem like we're going to be pulling back a whole lot and doing a whole lot more consolidating before we start seeing a lot more bullish continuation. And so I think that we're about to start that new trend where we've been in kind of this disbelief phase, but now we're going to venture into more of an awareness and more of a hope where the average retail investor actually starts to get more exposure into Bitcoin, and then that's when we start seeing the real parabolic return after that all-time high mark when we go into price discovery. And so I think we'll continue to kind of start this grind towards that halving mark. I think we might get some short-term pullbacks in between. But overall, that halving shortly after that is when I think we'll see that break of that all-time high, and then us into price discovery that'll bring a lot of new money into crypto. Really the thing that we've all been looking for with alt season and all of those parabolic runs that we've seen previously in the cycles.
Exactly. It starts with institutions, it starts with smart money, and then it slowly moves down and trickles into retail investors. And then the smart retail investors make money, and then by the time that we're at the peak of the next cycle, the dumb retail investors are going to be buying. And even more, not even retail investors, people like your grandma is going to be buying. And
it's going to be a crazy one this time around.
Yeah, exactly. But the thing that's so cool is that right now, companies like Coinbase, can you imagine if you're a company like Coinbase? You see Bitcoin's price right now and you're like praising the Lord above. You're so happy because of how cheap it is. So if you're an institution, if you're somebody that has access to large amounts of capital,
Right.
You're going to be seeing the markets right now and you're going to be like, well, I'm not going to bet against my entire business. I'm not going to short the $14,000 Bitcoin once we're back up at that price. They're going long right now, They're doubling down on everything, whether it's them putting money in the coins,
Right.
or whether it's them building infrastructure around their businesses and companies that are based around blockchain and cryptocurrency technology. People are going to be doubling down right now if they have half the brains, and a lot of these institutions have the brains to do what's smart in this. So yeah, psychology of the market. Very, very good time to be investing. Everybody's in disbelief. It's going to go into these new highs, and we're going to see euphoria. We're going to see new paradigm. And the halving event is coming up very soon. We brushed on that a little bit. Super exciting. Like we said, about 94 days away. That's an estimate. It can change depending on how many miners are mining and stuff like that. But basically, it's sometime around May of this year. And that should drive the price up as it has in the past. It just matches along with the technical analysis. I personally use technical analysis over the halving event. I look at TA before I don't base my entire trade, my entire investment on it. But they do not line up nicely. Once you've done your TA, the halving seems to drop on top of it.
And that's one of the things that you always have this big debate, and I see it predominantly on crypto Twitter because crypto Twitter is predominantly full of retail investors.
It's the wild, wild west.
Yes, and so what I've noticed is that you have these people that will kind of fight and debate fundamentals versus TA versus this and that. And to be quite honest, I think that the best thing that you can do for yourself is take from all of those. Take from fundamental analysis, take from technical analysis, take from different sorts of things like that, because then at the end of the day you're just accumulating as many tools as you possibly can inside of your tool bag that you can use to profit inside of the market. And so I see it oftentimes with people inside of my comments on Twitter. People will argue with fundamentals versus TA, and I think that you can't go wrong with both. I mean, use fundamentals for long-term investing. If you do believe in the fundamental use case for a certain project, then obviously you're going to want to hold that one longer, and use TA for shorter time frame cycle analysis and things like that for when are you going to scale out and take profits, when is a time where it's overbought, when can you reinvest in the market when it's oversold. And that's what's really important. It's not one side or the other. You don't only want to hold forever and ever. I mean, you can. I'm not saying that that's a wrong strategy either, but for me, it makes much more sense to hold for the long term, but knowing how and when to take profits is the biggest part of it all.
If you break above 20,000 per coin, and the next thing we know, Bitcoin's at 100,000 per coin, selling 5 or 10% of your Bitcoin is not gonna hurt at all to do that.
No. Selling 50% at that point, at least.
I do personally believe in always having a certain percentage that you hodl through everything.
Of course.
Because it just makes the most sense. And also, getting 100% out of a market is risky as well, because you're putting 100% into the US dollar. So you're just taking that risk and you're putting it into something else. So there's always that aspect. But yeah, no. Completely agree with you. Fundamental analysis. If you are going to use fundamental analysis, first of all, I personally tell people to avoid news, which isn't. Sometimes news will kind of sway you with a lot of fundamental analysis in the news. Just make sure that your FA is coming from good sources. Like, you're figuring out actually what the project does, what use case it has, how big the community is, and then and how the technology is actually developed, and then stuff like parameters like halving events and stuff like that. Those, in my opinion, is good fundamental analysis. The kind of bad fundamental analysis boils down from like FUD articles and like just news that's trying to like sway you based on what one person said, like, oh, this billionaire says Bitcoin is bearish, or this billionaire says Bitcoin is bullish. That's kind of more of like it's just like noise and stuff that isn't really as useful for creating the picture of what you're expecting to happen in the markets.
Right. No, I agree. And FA, I mean, I'm not even really big into FA personally. It's kind of something that's come after the fact. I learned TA.
TA first.
Yeah, I think that's really important, because as long as you know where price is going, then there's people out there that will have the opposing opinion where they first started investing through FA, and so they're actually going to have more of an understanding on how that works, and so you'll get the opposing opinions. For me personally, I've always started with TA, and so for me, I feel like I've gained more of a use case with learning TA first, and now jumping into the FA, because I can look at a chart and I can see a chart that looks really good. It shows a really proper market cycle, and it shows a lot of volume, a lot of the things that we look for when trading and investing. And then I can also apply that to the things that I can learn about that coin. Different videos on YouTube I can watch, scouting out their own website, and just actually trying to immerse myself into all of that new knowledge. And then that's kind of how I come to my judgments when it comes to investing. I think that with FA, it's more something that I apply with price, and other people might say opposite, and they might only use FA, or they might use FA and then look at price later. It's all just this different sort of game that we all play, but at the end of the day, we all have our own strategies, and that's the one that I personally have found that helps me the most, and that's kind of how we like to base our strategies around that as well, is just all of the cycle analysis, and then taking a look, not only that, but kind of how the fundamentals are, the bigger fundamentals, I would say, because like the halving event, that's one everybody knows. Different fundamentals around a coin. The bigger ones that are very important as far as just like what does it solve in society, because you have a lot of people that will come to you with different coins, and you look at the chart and it looks really terrible. You look at the website and there's stuff that's spelled wrong, and it's like, where are you really, like, where are you looking? Where are you getting these resources from? Because it has to be solving a real world problem for that to even be something that you're considering in your head. If it doesn't have an immediate partnership, if it doesn't have a problem that it's immediately solving in the now, then there's really no reason to be worrying about it.
Yeah, money and volume money and volume affect price. So when you're talking about what's going to make the market go up or down, it's really just purely based on how much money goes in or out. And that can't be broken down into one single factor. You can't just be like, oh, the only reason that this much money came in was because China said this or that, you know. And the other issue that comes from when you take fundamental analysis first is people get these weird ideas like, oh, Bitcoin is going to fail and Ethereum is going to take over, so I'm going to sell 100% of my Bitcoin and go 100% into Ethereum. And the issue that lies with that is you miss the fact that if you were looking from a technical analysis perspective, not only are both coins going to go up, it's not one's going to take over the other because of some magical fundamental reason. It's more that, okay, institutional money is putting 60% into Bitcoin, and they're putting 10% into Ethereum, and 10% into XRP, and 5%. And that's what moves the market, is where is the money going?
Right.
And so then you can take your portfolio and you can base it around where the money is going. And you can make money off coins that you might not even agree with the fundamental perspective of it, but you see the technical perspective and you're like, oh, BSV, oh, Ethereum, these look like great coins, but I'm going to keep the majority in Bitcoin for stability.
Right.
And I also am not going to look at this from a perspective of Ethereum's going to take 100% of Bitcoin's value because of some fundamental belief system thinking that, oh, proof of stake is going to only win and all proof of work is going to fail. That's not how the market is voting. The market votes with their dollar, and they vote with what they're building businesses and companies around.
It's really political, especially nowadays that we have so many different projects, so many different blockchains. You have this weird political debate all over Twitter about which coin, maximalism in general, which coin, my coin is the best, your coin will never succeed, this is the only one that can take place or whatever. You hear a lot about that kind of stuff, and to be honest, all I ever see when people are doing that is them missing out on massive potential in other areas. And like you just said, I mean, with BSV, everybody was talking down on it, saying it was going to go to zero. And then you pointed it out to me. We both thought it was going to, perform really well.
And it did.
And now look at it from that point. And so you have all of these different coins that you can make short-term profits on, and you can build up that, trading portfolio, whatever it is you're looking. If you're doing position trading in between like months of your positions, you can actually go ahead and do that. But then you can also keep your long-term bags, and that's what I do personally. I mean, one person that I don't really agree with a lot of the time, but he has a really good portfolio balance, is Hagenly. And actually what he does is he sticks to the 80-20 rule, but he has structured it in a way that's actually profitable inside of crypto markets. And so the 80-20 rule, basically the way he structures his portfolio is he has 70% in his long-term Bitcoin, whatever his long-term bags are, and then he holds 30% that he uses for short-term day trading, position trading, whatever short-term trading opportunities that he can do. And then that way he can keep a majority in his long-term that he doesn't touch, and then he can actually have a decent amount that he's trading consistently. So that way both of his portfolios are actually making him more money than if it was just one side or the other. And so with these political biases, I think that we're limiting ourselves to just a minor belief system. Only XRP will do good because it solves this problem. And yeah, that's definitely a case, but there's so many other coins that are doing things out there that we can invest in that will probably give us a bigger percent return if we know which ones to look for.
It's opportunity cost is what it really is. If you go 100% in one coin, you lose the opportunity to make money in other coins and other projects, and you also put all that risk into one project. So basically, if you're thinking about it, just compare the internet bubble, Go back and look what happened after the internet bubble popped. It would be like going and saying, all these other companies are going to fail, every single one of them. Yeah, a lot of them are going to fail, but you're basically saying every single one of them except for Amazon. And yeah, Amazon did really good, but there was Google, there was Apple that became the biggest stock in the entire world. There was all these other stocks that came out of the internet bubble, that came out of that revolution, and that really goes to show the fact that maximalism doesn't work, and you have to remember that putting it all in one is creating opportunity cost. If you're all in on Ethereum and you don't have any BSV, and then BSV does better versus Ethereum, BSV versus Ethereum, BSV is uptrending, you're missing out on a certain percentage of the profit that you could have been.
Right, I agree with that. And one thing I like to look at it is it's almost like politics in the real world, where you have like libertarians, you have Republicans, you have Democrats, and everybody's kind of bickering over which side is right, which side is wrong. And at the end of the day, it's like, well, these people have a good point about this, these people have a good point about this. If we could all just kind of come to the agreement that this is beneficial for society and we could help implement this in this sort of way, rather than trying to say that only this one is right and yours can't exist with mine, and all of these weird little barriers that we place, because all of these are revolutionary technology that we're going to apply to the real world, and we don't know how they're going to be incorporated. Sure, some coins that we look at as aren't solving a problem now could be developing future infrastructure for all of the entire world a few years from now, and so we really don't know. And that's why I think that it's really important that we kind of just branch out, keep our eyes open for all of the different projects out there that are solving real world problems, because nobody really knows at the end of the day, and we're going to make more profit doing so by keeping that open mind and not being so limited by these different barriers that we create by ourselves.
Because the truth of the matter is that everybody's right and everybody's wrong. Like, there's too many variables, there's too many situations, there's too many things for any one specific party to be right about everything and any other specific party to be wrong about everything, or vice versa. It's just a matrix of truth. And the thing that happens is we get this tribalism kind of thing, or like my campsite, your campsite, I'm going to shoot you with an arrow, like XRP only, I hate Bitcoin. Like that comes from like this tribalism, you're right, I'm wrong, instead of this more of like the honest perspective of like, we all have good ideas, we all have bad ideas. Let's work as a collective to figure out what works for everyone, you know? And I don't think that we have to have one single project that works for everyone. Just like America has different states with different laws in each state, with different people in each state, we can have different cryptos, that we all use different cryptos in different places for different reasons and different ideas, and it doesn't matter. You just choose where you want to live. You know, you choose whether you want to be in Texas or whether you want to be in California or whether you want to be in New York. You just pick what you stand behind from a perspective of what works for you. But that doesn't mean that you can't also agree with some of the ideas that another coin has and invest in it.
Right.
Or you know, be part of it in a certain way. So it's not just black and white. This is a large contrast, a large spectrum of people, ideas, and things, and everybody has something to add.
Right.
We all have some value to add to this.
Yeah, I agree 100%. It's going to be interesting to see kind of how all of the adoption takes place from all of this, all the things that we do know. Heading into this next cycle, things have changed a lot. New infrastructure, there's a lot of new money that's entered this market. The cycles have repeated, kind of like we've always thought they were going to, but it's nice to actually see it manifest. And so to see all this new money, to see all of this new involvement taking place, this infrastructure, this vision that we have, that it's going to change how we perceive normal life, and not only that, but how we actually interact with our everyday life in general. I think that it's really important that we talk about kind of how the volatility kind of coexists with how can Bitcoin be a currency that we use every day while it's so volatile like it is. Because there's the argument that people have, well, Bitcoin is going to be a world currency that we're going to use, but at the same time, right now, Bitcoin is so volatile that how do we actually allow adoption for a cryptocurrency to take place, and how do we actually minimize the volatility so we can consistently use it? Or if it is volatile, how do we consistently use it with that in mind?
So the biggest argument that I can think about with the volatility is how Bitcoin is an incentive-based network. Nobody runs Bitcoin because they don't want to. Nobody. Everybody that's part of Bitcoin does it because they want to. And the reason is because it has good incentives. Number one, you can get very wealthy investing in it. Number two, if you're a miner, you can make money. You can get consistent payouts every single, specific period of time. You get this money sent to you consistently, just like if you're investing in like real estate and apartments, and you had people living in these apartments and they were giving you money every single month for rent. Investing in miners is an incentive-based network. And so the volatility in an incentive-based network that starts at $0 market cap and moves to $100 billion market cap, in the period from where it goes from $0 market cap to $100 billion market cap, we see a lot of volatility in the market. The first drop was 90+%, the next drop was 87%, this one was like 84%, but every single time the drop is getting smaller percentage, because as we get that market cap increasing, the volatility decreases. And so, yes, right now the volatility in Bitcoin, specifically in bear markets, is frustrating for a certain percentage of people in the market. But as we grow, that will become smaller and smaller. and the incentive of the network will continue to cause it to grow.
Right.
So that we continue to head towards a direction of lower volatility.
To kind of touch up on that point, because you brought up the perfect perspective as far as how it's going to coexist with price. You know, the more money that comes into it, the less the parabolic trend is going to be as volatile, and that's just kind of the way it changes over time. To bring up another point, I think that with volatility, when we actually start seeing a lot of this new institutional money, that's what's really going to drive this this change in what we're seeing. And I think that volatility in general, we look at it in terms of price, but we're looking at it in terms of dollar value, right? Mm. And I think that that's where a lot of the volatility comes in, is through the inflation of the dollar alone. And so right now we're valuing everything in terms of dollars. We're looking at everything in terms of dollars, and we're seeing the stock market's going crazy parabolic. We're seeing Bitcoin going crazy parabolic. Every market we can look at pretty much just goes parabolic. And so I think that eventually you have to come to the realization where it's less of what the asset is doing, and it's more of what we're pegging the value of that asset to.
What we're comparing it.
And that's what Bitcoin is doing. We're seeing these big parabolic runs, but the only reason we're seeing that is because we're seeing a deflationary asset with scarce supply in an inflationary world with an infinite supply. So that's why Bitcoin's price is going up all crazy, but we got to stop looking at it. Well, that's the reason why it's volatile, but we got to stop looking at it in that way, and we got to start looking at it as what happens when we start adopting this new technology. Yep. What if we adopt Bitcoin? Are we going to start valuing things in terms of Bitcoin, or how will that work? Because it has such a scarce supply, so we don't know how all of that would line up. But that's the way I look at it, is volatility won't mean anything when the dollar doesn't mean anything.
True, and I completely agree with you. You couldn't have said it better than I could have. That is exactly what I've been thinking. And as we go from switching from comparing everything in dollar value to comparing everything in Bitcoin value, people won't even see or feel the volatility anymore. Mm-hmm. They only see and feel it because they're comparing it and pegging it against the dollar currently. You know, when you go buy your car and you're like, okay, this costs 2 Bitcoin, you're going to give them 2 Bitcoin. You're not going to think about the fact that your 2 Bitcoin may or may not have increased $5 or $20 in the past hour. You're just going to pay with your currency that's accepted where it's used.
Yep, exactly.
And so it's all just part of, it's just like what we've used this analogy before. It's just like we're in the dial-up, or even a little bit before dial-up era of Bitcoin in comparison to the internet. And so we're going to see these types of things, and we have to shift our perspective. And as we shift that perspective, these kind of problems that we see right now, or arguments that we see right now as issues of Bitcoin, will fade away as it grows.
And I think it's really hard for the average person watching this, and just not only just watching this, but just people in general, to even have the foresight to see something like that, because what we're talking about just barely is 10, 15 years down the line, maybe.
Yeah.
It could be sooner than that. We have no idea with how fast things are progressing. We don't know what kind of black swan event could just kind of be the tipping point for a lot of new development to take place. But what we do know is that this is stuff that's, years down the line. We'll have this next cycle, and that will bring a ton of awareness, a ton of development. But I think that after that point will be the kind of the bubble top, and then the next bear market after that will kind of just be where we are getting a lot of that real infrastructure being built, being implemented in society. And then after that, we'll have another cycle of some point. But I think that it's really hard for people to see kind of what's to come. Talking about, Bitcoin being something we value things in, and we look at it as this peg, then it's hard for people to see that, just because of how early we still are. At the time of right now, cryptocurrencies themselves are still very undervalued. Mm-hmm. It's hard for people to even realize them breaking it beyond all-time high, and now we're sitting here talking about potentially Bitcoin being the thing that we value all other things in. Right. And so it's really weird to think about that, but I do believe that this is the way that we're going. We are in this digital age, the money we use every day is already pretty
digital.
much digital, and so we now have a system for implementing on that. It's only a matter of time before that takes off. It's only a matter of time before we implement these systems, and I think that this is really the first awareness stage that all of that starts to take place before, you know, this is something that we do in everyday society.
And for the people that are always like, you know, Bitcoin is too expensive for me to invest, why would anybody else invest in it with how expensive it is? You guys are the ones that are going to miss out. Like, you cannot look at something and be like, I can't buy this because it's too expensive. What you have to do is you have to value yourself first. Realize that you're valuable enough to purchase this, that you deserve Bitcoin. And then second of all, realize that you can buy a fraction of it. Mm-hmm. You know? Like, but I do think that we will see the stepping stones that takes us to a place where we value things in crypto. And I think that Bitcoin will be the mothership of most of cryptocurrency.
I do too. I think that that's definitely the case. I mean, the government created Bitcoin, and so we know that. Are you sure? Do you think the government made Bitcoin? To be honest, we've talked about this before. I've always thought it was a little bit fishy that nobody knows who Satoshi Nakamoto is. It's just this random alias. Conspiracy time. I personally do not think that it's just some kind-hearted good Samaritan out there that just wanted to save the world. I think that there's a bigger means in the. I mean, there's a puppet master that's pulling the real strings, and so kind of. I really don't try and get too conspiratorial with the whole thing, but Bitcoin itself is a conspiratory thing. Nobody knows who created it. True. It just appeared on black market sites. People started. For all we know, artificial intelligence may have made it. Like, we don't know for sure. But it's really crazy to think about that nobody to this day knows about Satoshi, and the wallets have never. The original Bitcoin have never moved. And now we're to this point where we're starting to see institutional involvement in this. To me, it sounds like the government is in on it. It seems like somebody, whether it's a government or whether it's some very high-powered people in society that we don't know about, I think that they have the means to create something like this, to get that one world currency out there, a global payment system that can kind of unite the whole world. Because, I mean, the New World Order, they've been talking about this, having this one world currency. Forever. Actually, a long time they've talked about a one world currency. Exactly. So we are now starting to see that taking place, and I think that there's more of a means that somebody created this than just, right after the financial crisis, the times were right for something like that to succeed. Well, what a lot of people don't know is that the technology that we use for the internet was in a great part invented by the government. And so the internet itself was something that basically spawned out of government programs. And when you're thinking about Bitcoin, and you're a government that's really intelligent, has a lot of resources, and you're thinking, how do we get this world to stop fighting? How do we get this country to stop fighting this country, and this country to stop fighting this country, and this one to stop fighting that one? Well, we have to unify the world through the payment system. Because the reason that we have all of this, your flag, my flag, all of this kind of stuff going on, just boils down from the fact that we have different currencies. And we have to unify money as a global system to make it so that, okay, it's no longer beneficial for us to bomb America, because then we bomb half the Bitcoin miners. And that's going to affect the currency of the world. So it would in theory unify the planet in a way that makes it so that war would go down, poverty would go down, and corruption would go down. So I know that sometimes when people think about conspiracies in the government, they think about conspiracies of like stuff that would be bad for everybody. But sometimes the government works in kind of in a conspiratorial way for what's going to be best for everybody too. And I think that could be the case with Bitcoin. You don't know if Bitcoin was made by the government, but it definitely could have been. And if it was, I see the incentives. Right. I understand why they would do that. Who knows, really? I mean, who knows if Satoshi's Bitcoins will ever actually even move. I think that all of this is just something that I mean, isn't talked about a whole lot because this community is so small. It's going to be real interesting to see what happens when, this is actually something that's widely adopted and being used, and then we have this conversation again, well, who created it? Who is this person? Because at the end of the day, Bitcoin was sold as being this completely anonymous thing where drug dealers used it. They could buy and sell drugs illegally and nobody knew about it. Yeah. Got the Silk Road shirt on today, actually. That's like what spawned Bitcoin. And so with Bitcoin, it was kind of sold as being this completely anonymous thing. But the more that you learn about it, the more that you realize that with Bitcoin
isn't anonymous.
Bitcoin itself is not, because you have your public ledger that gets posted, and so every transaction you make, anybody can see that if they know who has information to your address, and so it's not itself anonymous in any sort of way, and so who knows what way this whole blockchain movement's going to go? Who knows what happens with anonymous tokens that help shield your identity and stuff? I think that we're going to move towards more of a even more encrypted, decentralized way to where we have our privacy. But there's always that potential that lies where, with Bitcoin not being anonymous, what happens if we do start using this and we have institutions that can track us through, know your clientele? They know us based off of our personal identity records, whether it's like, legal documents or something like that. If we have to even create an address to send and receive value on the Bitcoin blockchain, we might have to then sign over, information,
identity.
Proving that we are who we are to actually use that system. And then what can happen from there is you now have, these corporations, these third parties or whatever that can actually see kind of who's sending what money and where it's going, whether it's a government, something. And that would, in theory, put it above Bitcoin, which I don't necessarily think is probable at this point. I think that we will have systems that will be developed that will keep our privacy, but there's always a potential that lies with this. I mean, there's different governments they'll talk about that Bitcoin is a good thing, because if you were ever to steal money from somebody and they report the address, then how are you ever going to get that money out of where it's going? I mean, you could then transfer it into something that was anonymous. But for the most part, if they know where the address is going, they can kind of track it from that point. And that's what we've seen with hacked exchanges. They've transferred the Bitcoin off, and it hasn't moved because, like, where are they going to go with it?
Yeah, exactly. They can't hide. They can't hide. It's all public ledger. Yeah. So there's aspects of Bitcoin that the government might not like, but then there's also aspects of Bitcoin and crypto and blockchain technology in general that could actually create more of what they're looking for, basically. More of a better system than just all these random banks. I mean, if you think about all these banks, each have specific servers where they hold all of your transactions, and if they're trying to find somebody, they have to go to that specific bank, they have to get that data, they have to pull it from, and it's just this big mess rather than like an organized network of payment systems. So yeah, I think that the biggest thing that the government probably wouldn't want with the whole Bitcoin situation is a tax, like the fact that tax is harder. But they're going to enforce taxes either way, and maybe they make a smart contract that makes it easier, and even a payment system that is easier to use. Like a blockchain-based government tax payment system where you can go to a website and you can pay your taxes all with cryptocurrency. On the internet easily without this huge process of verification and all of that. So it could actually be very good for the government when it comes to stuff like that. Yeah, and I also think, one more thing, I also think that as we grow in value in the world, as Bitcoin creates more value and as the global economy gets bigger, I think that we will probably, if that continues to happen, taxes might actually go down. Because there'll be so much value that we won't need to tax the people as much to continue to keep the system alive. So that'd be cool. That'd be really cool.
I'm always down for no taxes.
So who knows? Maybe the government made Bitcoin, maybe not. Either way, it could be very good for them. I think that if anything, they're seeing it as an opportunity.
Yeah,
So
I agree. I think that's, I mean, China's obviously seeing it as an opportunity, and I think that America and everybody else will follow suit. Other countries are adopting it. It's only going to continue to snowball from here, and so we're at the forefront of all of this, and it's really looking exciting as far as what's developing up to this point. I'm looking forward to making all of these profits alongside the cryptocurrency bull run, that's for certain.
Same. So, yeah, I think that is most of what I wanted to go over today. I'm very, very excited to continue making this podcast. It's a little sick last week, which is why we didn't do one. But you can continue to expect these every single Friday. You know, F the banks hashtag.
Yeah, always remember, guys, leave a like, comment, and subscribe to both of our channels for more updates. You guys can find access by clicking the invitation link in the description of both of our videos, and there we're going to have access through that. We have access to our Discord servers. You guys can subscribe to both of our YouTube channels, and you can find a number of our other social media handle, Twitter, Instagram, Facebook, all of the above. So thank you guys so much for tuning in. It's been our pleasure hosting this once again for you guys. This is something we look forward to doing every single week. It's nice to talk about these things. I know Dallin enjoys it a lot, so just thank you guys for tuning in. It's been our pleasure for sure.
As always, stay profitable
Peace
out
there.